All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. I want to talk about how we played crude oil today. As many of you know, this is kind of my market of choice. We look at the Nasdaq, the S&P, gold futures in addition to crude oil, but crude oil here has been my bread and butter for many, many years. And if you wanted to have a knack in one. I'm a big proponent of having a knack in one market, right? And I do that for a couple of reasons. A, I want to be ultra focused on what's happening in one market, right? I can interpret multiple markets all at the same time, and bigger picture analysis all comes into play and all that stuff. But when it comes down to the absolute intricacies of the price action that's happening, the liquidity that's coming in and out of that market, the order flow, how buyers and sellers are reacting in certain areas. It's hard to be scattered into consuming too many things at once, right? Like I see some traders, they have this watch list of like 10, 20, 30 different assets that they're scrolling through, a variety of futures markets, a variety of Forex, a variety of crypto. Listen, if it works for you, God bless you, right? Like I always tell people, do what works for you, right? I have always been a person in my life, right? Like I know you come to understand your character when you become a trader, right? And it's a reflection of your life. It's a reflection of the choices you've made. It's a reflection of who you are as a person, the way that you learn, the way that you execute, the way that you grow, right? For me, I've always been a focus on one very specific thing, master it, it then becomes natural, and then I can focus on the next thing because this thing I've mastered has really always just, follows through, right? It's just maintenance at that point. And guys, that's been with everything in my life, like focusing on relationships, building businesses, health and fitness, trading, you name it, investing the whole 9 yards. So I am a blinders kind of person. So I laser focus on one thing at a time. Why do I do that? Again, it comes back to my character. It comes back to who I am, right? Like I can focus on selling trading products, or I can focus on trading, right? Like I need to pick what makes the most sense to me, right? People seek me because they want to trade with somebody who is laser focused on the trading more than the selling of products and services. That's why people are attracted to me, right? I'm not seeking them, they seek me. And I prefer it that way. Why? Because I get higher quality clients, right? Like you can go out fishing for anybody that's going to pay you a monthly fee or a big purchase or whatever it may be. And more often than not, that becomes a headache. Whereas when clients seek me, it's much better. It's a better interaction because they want to be here. They weren't sold something, they were attracted to something. Big difference, right? And I've grown my businesses like that for many, many years. Yes, is it organic? Does it take longer? Absolutely. But when you acquire a client or you acquire a customer or whatever it may be, that person sticks with you because they gravitated towards you, not you sold them some anomaly, right? So for me, it's focus on the trading. And that's what allows me to deliver my client the best experience because I'm not focused on selling the next client. I'm focused on delivering the trading aspect of who and what I am. So with that being said, guys, I want to talk about crude oil specifically for today. Yesterday, we talked about a variety of markets. Yes, we talked about the Nasdaq, the S&P this morning. Kind of a crazy morning. A lot of staggered news, economic numbers that came out this morning. We have Powell speaking shortly after noontime. So, kind of a clustery market. Now, as far as crude oil specifically is concerned, we had inventory reports at 10:30. Had to be conscious of that. We also have OPEC meetings today. So if we get any kind of headline releases out of those OPEC meeting minutes, we could very well see some volatility too. So we were aware of that. So my goal was, hey, listen, I want to get in and out of crude as early as possible, avoid the inventory report altogether, and be done. Be done. Out of the game. Be done. And that's exactly what happened. How did this happen, right? A lot of you are using these, whatever's popular, SMC, ICT, whatever the YouTube guys are talking about. I don't know. I don't really care. That's all very retail stuff. If it works for you, wonderful. Okay. I personally am a long-handed analysis trader. What does that mean? You can see kind of in the background of the screen here, this is my own hand-drawn interpretation of support and resistance within the marketplace. Okay. I've been doing that for many years. I feel very comfortable with it because more often than not, price is very reactive around the areas that I identify. Okay. In the morning, my traders that join me, they have a full market breakdown of the S&P and a full market breakdown of crude oil. We do trade gold and we do trade the NASDAQ. Gold and the NASDAQ can be very reactive to the S&P. So these four markets in weird ways correlate with each other, and that's why we trade these four specifically. So in the email they get, and of course I comment on it live, intraday levels, which I'll be watching carefully to see how buyers and sellers react around for light sweet crude oil, are as follows. Okay, there's a whole variety of levels, 86.10 through 86.20. The high of this candle is 86.10. The high of that candle is 86.20. This is not a coincidence. Take a look at the higher time frame. 86.10, okay, that's the first test. 86.20, that's the second test. Guys, we have contained buying based on higher time frame analysis. Okay, am I telling you that I'm always right? No. Am I telling you that I'm wrong? Yes. Profitable traders take losses. Okay, it's about an aggregate of over time. There's not any trader that tells you they're 100% accurate. Any program or software that tells you they're 100% accurate, they are a bunch of liars. Okay, I would say it right to their face. The best traders making the most amount of money, they take losses. They go on losing streaks. It's part of the deal, guys. Right? That's why this game is so hard from a mental, psychological aspect. This business is tough, right? There are days that my wife comes home and I am in a great mood. Today I'm in a great mood, right? There are days my wife comes home and I'm not in a great mood. Why? Because the market didn't give me what I wanted, or I forced something I shouldn't have, and that is the cost of this business that we're in. So first run up here, 8 o'clock. Getting together with my clients, I jump on the mic, and I don't do a Discord. A lot of people ask, why don't you have a Discord? I don't do a Discord simply because it's too noisy, it's too chattery, and it's too delayed, right? The market can change in an instant. In a millisecond, the market can change, right? And the only way to get that data that quick is to be in a live setting. So the way I run my room is you come to a live analysis room. I populate 4 charts. I populate, the book map and liquidity that correlate with them respectively. And then this way I can talk through what I'm seeing in real time, talk about what could be a potential opportunity, and also talk about what the potential risk associated with that opportunity could be. Because analysis is two-sided, right? It's not just buy here, sell there, to, move your stop, blah, blah, blah. It doesn't work that way, right? And you'll find through all these $99 programs that you've bought that it doesn't work that way, because it ends up not working that way. I just know, right? Trust me, I bought every program out there as I've been along this 13-year journey. It's just a sales pitch, okay? There are amazing internet marketers out there. I've worked for some of them. They're phenomenal. It's amazing the revenue they can generate from selling a fantasy, right? Well, there's no fantasy here. It's all reality. Trading's hard. There's a skill set I've acquired over 13 years that I believe I improve on with each and every passing day. I learn something new each and every passing day, and my goal is to bring that to my clients. So right here, like I said, 8 o'clock, we come into 86.10, right here, 86.10 through 86.20. These are the areas I'm very specifically looking at. Right here, guess what happened? We get a strong push. Now, what I do is I grade my candles, okay? I grade candles that have meaning to me. And I grade them based on the interaction between buyers and sellers within those candles. So if I'm in an uptrend, I'm looking for what? Consecutive kind of higher lows. If I'm in a downtrend, I'm looking for what? Lower highs, right? My goal there is to short those lower highs or to buy those higher lows along the way. Or if I get a nice momentum push, like I got a little nice momentum push here, then I'm buying into new highs. Okay, so a couple different scenarios. One is not right, one is not wrong. It really just depends on what the market's doing. We have to adapt to that. So really strong candle here, another really strong candle here, drives us into 86.10. At 86.10, we basically have no more energy to push higher, right? Got a bunch of buyers, but no sellers taking the other side of the order, and we're not making any advancement. Basically, we run out of steam. So what happens? We fall back. We fall back into where this prior support was. So what I've realized is that we are in a high probability reversal area. Now I'm looking for the lower high. Okay? If I can get a lower high, and I can be very precise about a very specific candle, I will take a short. Right? So we push up here, we push down, we push back up, we get strong buying, but no movement out of this tiny little candle here. I get short, I hit the sell market, I place my stop right above this candle. If I'm wrong, what am I risking? The close is at the close is at 04 and the high is at 07. Right? I'm literally risking 5 ticks. And if I'm right, I'm going to at least pull through this low down here at 81, 82. And if I'm really right, I'm going to push even a little bit lower into what I predict to be support at the rolling VWAP. And almost instantaneously, this candle closes, I fill my order with the stop already populated, and I'm ripping through this prior low. So my sequential high, low, higher high, lower low transpires very, very quickly. Okay? So what have I done at this point? I have paid myself. I have covered a portion of my position, and my stop is now slightly in the profit. 2 or 3 ticks. Just covering any whipsaw that may come back up in the area, knock me out so that I don't add a small loss to already wonderfully profitable trade. Well, guess what happens? We impulse, we correct, okay? Get some strong selling here, lack of follow through in the top of this candle, and we push deeper. Well, where do you think I'm taking more profit? At the session fixed VWAP right here. I took profit at 85.55 on the way into the VWAP because I know that the VWAP can provide great support, right? The rolling VWAP did, and the fixed session VWAP did. In fact, this turned things back around. Okay? So, got short here, took profit here, took more profit there. Stop is in the profit. Okay? Market pulls down, market pushes back up, pulls back down, reassigns this area that was support, 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 breaks, should be considered resistance, breaks again, provides support, and a really strong candle right here. So I go, okay, if we hold this as a higher low, which is a potential, we're going to drive back higher, probably to retest this high or slightly above it to 86.20, right? Here's 86.20. Well, guess how high this candle went? 86.20. At 86.20, we saw a strong reversal here. And literally from the wick of this candle, we plummeted in a very short period of time back into support. Now, what happened here, right? Right here, we got the inventory report. So since the inventory report, we have been in a period of consolidation. It is what it is, right? Did I buy this low back into this high? No. And I'll tell you why. Because I knew we were within about 25 minutes of the inventory report. Did I take this short back into this support line? I did not. Because we were literally less than 5 minutes away from the inventory report. When there's strong economic data, whether it's broad to the market or specific, like the inventory report is to crude, I try to just avoid the price action because sometimes we can just fall sideways, right? And sometimes it doesn't work out for us, okay? So why did I took a great trade this morning. Why did I need to add any risk? Did I read the market well from this higher low, pressing into this prior high, testing 86.20, and then it falling back? Yeah, I read it wonderfully. Okay? You don't have to overtrade. I more than exceeded my daily goal in this trade. And I knew I was nearing the inventory report. So for me, I'm a very conservative person. I sat back. I continued to read the market. Why? Because continuing to read the market provides experience, right? The best way to learn is to establish a plan and then sit in front of a live market and watch it transpire over and over and over and over and over again. Right? I'm done for the day. But I will watch the market for probably a few more hours. Why? Because I will gain experience from doing that. Imagine watching the market for 5 hours a day for 5 days a week. That's 25 hours a week. Right? That's 100 hours a month. That's 1,200 hours a year. How much more experience would you have if you invested that time into watching the market? If you want to be a professional, profitable, consistent, disciplined trader, that's what it takes. Okay? This is not a part-time gig. This is not a side hobby. This is not a side hustle. This is a real business. And a real business requires real attention, real dedication. When you're done watching the market, you need to journal. You need to review. You need to reflect and learn. Take what you could have learned from today so that you can apply it to tomorrow. It's that simple, guys. Right? Like that's how a business works. This is a business. This is not entertainment. Not a side hustle. Not a part-time job. This is the real deal. Full time. You have to be in it to win it. Right? If you're using retail trading methods, that's fine. Make sure it works for you and make sure you have a plan around employing consistency. Right? If you're using order flow, if you're using liquidity, if you're using higher time frame, make sure you're using it all consistently. Okay? And when you go to add something new, if you say, all right, I'm ready to add XYZ, make sure that you know that needs to be proven through not just back testing, through live market conditions that you're making interpretations, assumptions, and actions based upon. Okay? It is not a roll the dice and get lucky business. Trust me. Right? It took years for me to come to a full understanding of interpreting price action from a long-handed perspective so that I can confidently go, I am very interested in what price does at 86.10 and 86.20 and anywhere in between or around that price action. Right? That wasn't just a guess. So I encourage you to invest the time, the money, the effort into understanding as much of the market, as much as price action and volume and liquidity and order flow as you possibly can. Because those are the things that are going to make this sustainable for you. So with that, I wish you a beautiful and blessed day. I look forward to seeing you in tomorrow's video. God bless, and I will talk to you all soon.